Hello, everyone. Hope you're doing great today. It's July. I'm in sunny, which now turned partly cloudy, Orlando, Florida. So we're dealing with a lot of humidity, as you can imagine, and it's quite warm and hot. Super appreciate everyone on the call today on the webinar joining us for navigating provider relief fund portal reporting. And our hopes for today is that I'll go through some topics and navigate some FAQs that you might be questioning and calculations and things that go into the portal reporting for the Provider Relief Fund. And hopefully we'll answer a lot of questions, and hopefully we will take away some anxiety related to portal reporting. So we'll get right into it and go through agenda. We'll touch on.
And Greg, before we get started, I did want to let some folks know that this is going to be recorded. So if they want to view those slides later on, those will be posted on our website, cbh.com, within about 3 to 4 days after this webinar. We will also take some of those questions you have, and if we have time at the end, we will go ahead and address those. But if we don't have time, just know that we will get you an answer to your question via email after the presentation. So thank you so much, and Greg, go ahead and take it away.
Thanks so much, Maddie. She's going to be my co-pilot and guide during the hour, and appreciate everything that she's doing to help us get through our session and also make all the information available to everyone after the fact. For reminders, or hopefully it will be helpful, or to show staff on your end. So during the session, we want to discuss some of the timeline updates for the portal reporting periods. They got changed in June, and the portal opened in July, so we'll touch on those. Touch on some things to get prepared for portal reporting, whether you be registered or not, what you need to have together to be prepared to get into the portal, and what you should be submitting. Items to be included in the portal reporting, whether it's the expenses, there are certain data elements that need to be reported, as well as touching on lost revenue calculation. And what to expect and input during the portal reporting. So some addressing and slides related to how HRSA has set up the portal, and also distributed a portal reporting guide and workbook, worksheets to follow, and what you would consider when being ready to report. Some of the FAQs to consider when reporting. These will probably be placed throughout presentation to be discussed in their individual topics, because some are in overview in nature, some are lost revenue in nature, some are expense in nature. So we thought it'd be helpful to just place those throughout. And some comments at the end on HRSA's expectations with portal reporting and a single audit, and how HRSA is expecting to have the portal reporting match single audit reporting. And we'll discuss what that looks like. So we've got June and July 21 updates, and some of the June updates related to it established the portal reporting periods. We'll go over those. It updated the time frames for using received PRF. It established deadlines for the portal reporting periods that previously were left unanswered, and updates to some of the FAQs between June and July. In July, we received an open portal. So we had an announcement related to the portal being open and ready to use. HRSA released a portal user guide that was posted to the HHS website, provided portal reporting worksheets and guides, and even more updates to FAQs that have come as late as July 15th. And so we'll go over some of those along the way as well. So related for the timeline and the use of funds, HRSA is defined this as a period of availability. And so I'm not sure if you all have, I have been on the webinars related that HRSA has presented along the way. And so they use certain terminology, try to incorporate some of the terminology that they're using into this presentation. So if I get off a little bit, I apologize, but mostly trying to equate our language and what we're talking about and what we're working with and what we need to report and how in the definitions that are provided. So this is period of availability. So provider relief funds may be used during a period of availability to reimburse recipients for healthcare related expenses to prevent, prepare for, and respond to coronavirus and attributable COVID-19. So the reporting periods were defined as 4 different reporting periods. And period 1 is the payment. If you received a payment during the period of April 10th to June 30th, 2020, your period of availability, which is a period that you would spend those funds, would be from the time period of January 20 to June 30, 21. Your reporting time now has been defined as any time between the portal opened in July 1st of 2021 to September 30th of 2021. Subsequently, there's period 2 for funds that were received between July 1, 20 to December 31, 20. As a second period, the period of that availability still begins January 20, but now all the way through December 31st of 21. So you would have received those funds after July 20, but used them by December 31st, 21 upcoming. Your reporting time period would be the period January 1, 22 to March 31, 22. Your period 3 subsequent to that would be any funds received during 21 up through June 30, 21. Period of availability would be same in the beginning, but even though it's available, if you didn't have in hand, perhaps you weren't expending it, but we can go over how it would be attributable into the portal reporting up through June 30, 22. So the reporting time would be July 1, 22 to September 30, 22. Subsequently, they've defined the 4th period, another period from July 21 to December 21. Period of availability similar, but all the way through beginning, but all the way through December 31, 22. And that would give you all the way to March 31, 23 to report those periods. So we've got 4 different possible periods of reporting into the portal, and those need to be considered when you're putting your information into the portal. So the timelines for portal reporting is that, one, they acknowledge there's no extension on the use of funds beyond the period of availability. So making sure that you're within your defined periods and the period of availability, the receipt periods to the period of availability to the period of reporting. And so during the periods of availability, 1, 2, 3, and 4, your deadlines to use the funds for period 1 were June 30. You have a deadline of returning the funds by October 30. So you have a deadline of filing, as we said on the previous slide, by September 30, 21, but a deadline of returning the unused funds 30 days beyond the filing deadline. So in period 1, if you have returned funds, they have to be returned by October 30, 21. Period 2, April 30, 22. Period 3, October 30, 22. Period 4, April 30, 23. Any expenses or lost revenues that are incurred outside of those periods of availability are considered unused. And so you have to perform the calculation, do the portal reporting, determine if you have any unused funds, and they must be returned within 30 days of the reporting time period. So just a few period availability reminders. The period of availability, period funds can be spent on eligible expenses, and we'll touch on those, and the lost revenue calculation, we'll touch on that. Sometimes these are HRSA's words. The period of availability is sometimes referred to as the period of performance. Services must be fully executed, completed during the period of availability. Tangible property and we've got another FAQ on this, does not need to be in hand by the end of the period of availability. If you have any renovation or construction contracts, they should be fully executed. However, perhaps based on your accounting, may not have been fully paid for by the time that you account for them in the portal reporting. So let's talk about the first step, which is registration. Hopefully everyone has registered, and I think it's been out for a while, since January 15th, that the registration, the portal is available to be registered into. They expected about a 20-minute process if it took that long, but you needed to go in and register. I encourage you, if you've not done so far, since the portal actually opened on July 1st, that you go in and register and walk through these elements that are necessary for registration so that you can get prepared in order to perform the portal reporting. Some of the information is required to register your TIN, mostly for parent company. You need subsidiaries, business name, your reporting entity, contact information, address, a lot of biographical information. Just going through the registration process mostly records a lot of basic information related to your company and the identification as to the funds that were received, and that will flow forward into the portal reporting. So there are about 6 steps that are included in the portal itself, and I encourage everyone to get into the user manual and the guide that was provided on the HHS website. It came out just after July 1st, July 2nd, earlier this month, and you can open it up. I think you'll find that it's rather user-friendly, that it's straightforward, that you're able to just click through the various screen sets and see what's available to be presented, and it will take out, if you have it, any anxiety that's related to what should be going into the portal and how much time it's going to take. The order for reporting is the interest earned, if any, on PRF. If you put in a bank account, earn interest, the measurement, they want to know. Any other assistance that was received during the COVID period, FEMA, other types of assistance, SNF infection control distributions. Previously were not mentioned or told to not be reported. It came into after the June regs were released. And so when the portal opened, there's a section for reporting SNF infection control distribution targeted payments if you receive that distribution. Use of general and targeted distributions. They want to know how the funds were used. And that relates to eligible expenses, and it relates to lost revenues. So you have the net unreimbursed eligible expenses as the next step. What did you spend the funds on? And any lost revenues is a calculation of revenues that perhaps declined from the period of 19 to 20 or budget 20, and we'll go over those pieces where there's certain lost revenues calculation. But this is the order of how the portal was set up. Some additional guidance related to portal reporting is that entities will report using their normal basis of accounting. So how you normally perform your budgets and how you normally present or perform your financial statements, using those bases of accounting will be how you'll input the amounts that you'll input into the portal. So if you're on a cash basis of accounting, that will prevail, accrual, modified, however you account for your expenditures. If you receive less than $10,000 in a period, there's no portal reporting that's applicable for those periods. If you receive multiple payments of $10,000 within a period, then yes, you're going to have to report those. It's just the $10,000 per period. If you had received over $10,000 but less than $500,000, there's a bit of a simplified reporting within the expense category related to G&A expenses and healthcare related expenses. that you can aggregate and not have to do the detail that are broken out by subcategories. And then the fourth, if you received over 500,000, you'd be required to list out all the subcategories that are included in the portal. And so you're going to want to be ready for that. HHS has provided an Excel workbook that's available on the HHS website, on the Provider Relief Fund website, and you can download it and go ahead and prepare your expense categories and fill in those blanks ahead of time before you actually put them into the portal. Some of the data elements that are reported during the portal reporting process relate to the entity overview, the information that comes in from the entity, subsidiary questionnaire. So for parent companies that have subsidiaries, you have to report certain amounts of information related to the subsidiaries, information about funds that the subsidiaries received, acquired or divested subsidiaries, subsidiaries that were brought in during the period or let go during the period, interest earned on the PRF payments, tax and single audit information if you were subject to tax on PRF, or if you're subject to single audit, if you received over $750,000, would you have to have the single audit? You have to report that. Any other assistance that was received during the period. Any use of skilled nursing facility infection control payments that were applied and how that they were used. And then the use of the general and the targeted payments. Unreimbursed eligible expenses, those expenses that were not paid for by other revenue sources. No other revenue sources were responsible for paying for those expenses. And lost revenues attributable to COVID during the periods of lost revenues measured in a certain way. Some personnel and patient and facility metrics, and at the end, there's a survey, and they would like for you to have that completed as well. So discussing some of the expenditures that you would put into the portal related to COVID. The expenses must be on the reporting entity that's in receipt of those and made during the Provider Relief Fund in order to be considered eligible. That was a question, it was an FAQ, and the answer was no. For purchases of tangible items that were made using Provider Relief Fund, the purchase does not need to be in the reporting entity's possession. So you don't have to have received the purchase at the time that you're reporting. The cost should be incurred and before the deadline of the use of funds. And this would be an item where you had an expenditure, you hadn't received it yet, but you put the expenditure in your accrual basis of accounting. So you would go ahead and include it in the portal reporting period. Some considerations on parent and subsidiaries when you're going through the portal reporting. The parent entity may report on its subsidiaries' general distribution payments. So the general distributions can be made at the parent company level when you prepare or register in the portal and prepare your parent and subsidiary, enter your subsidiary information. Any of the general distribution payment to the subsidiary can be reported at the parent company level, so you don't have to do multiple reports for each of those TINs. However, if some of the subsidiaries did receive some of the targeted distribution payments, they must be reported by the actual recipient at that TIN level. So if you had sniff infection control or some of the other distribution payments, they were at a sub, they have to be listed at the sub level. So the parent, conversely, is not to report on the subsidiary's targeted payments. And if any of the targeted payments that were received by the subsidiary were transferred to the parent company, then those should be reported by the subsidiary as to the amounts that were transferred to other related entities and including the parent company. So getting into patient care revenues, which is going to lend us into the portal reporting for the lost revenues payments. PRF amounts, and this part excludes the nursing home infection control distribution payments. PRF payment amounts may be applied to patient care loss revenues, and those loss revenues are generated from non-patient care sources. Those are listed below in this slide, so just giving you a list of items that would not be permitted to be included as part of the insurance, as part of the lost revenue. So any insurance payments are received, retail, non-patient care dining, fundraising, real estate, prescription sales revenues, any other grants, tuition, including PPP and other payments, contractual adjustments, charity care, bad debt gains, all of those changes will not be included. They're not permitted as part of what are included as patient care revenues. When entering lost revenues into the portal, you've got a basis of 3 methods that you can use. And you can either enter the actual revenue from 2019 compared to the actual revenue from 20. And I'll show you in a chart in a few minutes how that works. 2020 budgeted revenue compared to actual 20 revenue, which is option 2. And the alternative reasonable method, which is report as calculation of any reasonable method, but you have to submit the calculation. And they must be reported by calendar quarter. That would be for 6 quarters for period 1, which would be the January 20 through the June 30, 21 period. So this is a chart related to the lost revenues calculation options. And all calculations and source documentation, regardless of the option, must be maintained to support the lost revenues. Some of it is just maintained, some of it is not actually submitted. In option 1, you have 2019 actual revenue. Use your 2019 actual versus actual. Frequency is by quarter. Duration of lost revenues per quarter per period. And the service lines. All patient care services and budget approval date is not applicable because you used actuals. That's the simplest method of entering into the portal. And if you clear that hurdle very easily on the lost revenues, that is the lightest method that you can use inside the portal, that you don't have to file and submit additional information if you're able to clear it. If, for instance, option 2, using the 2020 budgeted revenue helps you even more to be able to clear the hurdle and helps you to be able to pull in additional funds from a lost revenue calculation, it's the difference between your budgeted for 2020 to your actual patient care revenues for 2020. So you enter your budgeted information from 2020. Your calculation is your budgeted versus actuals. It's still quarterly. You just enter your budget and use that method. There is an attestation that the budget must have been approved and an officer must attest that the budget was approved by March 27th of 2020. So that's a consideration if you use an option 2 for budgeted revenue versus actual revenue for 2020. And then the option 3 we'll talk about a little bit more, which is any reasonable method of estimating expenses. It's called the alternate reasonable methodology approach. No base period for calculation, no prescribed calculation method, nothing in the regulations related to how it should be calculated. It's just a reasonable method and the methodology has to be submitted. one of the FAQs that came into the portal or into HHS during July, and this one was dated July 1st, was a question about whether there isn't a maximum allotment of the organization's provider relief funds that can be allocated to lost revenues during the period. And the answer is no, there's not a maximum or a minimum that can be allocated. And in actuality, it's possible for a reporting entity to enter zero. If the provider relief fund payment amounts fully expended based on the expenditures during the period, then there are no lost revenues to be attributed or necessary to be attributed. For option 1 and 2, the lost revenues calculated during the quarter, as we just said, a standalone calculation. 2019 quarters serve as a baseline, calendar quarters reporting. The quarters or lost revenues are demonstrated in total for the lost revenues amount. And at the end of this, option 3 provides lost revenues using an alternative reasonable methodology. And so if any or many of you have been on some of the websites, webinars that HRSA has put on, they have been encouraging. So a couple of FAQs that encourage, in essence, the methodology of 3, the alternate calculation methodology, if you're able to really reasonably and very well document how you've calculated it. And they've been encouraging, both in the webinar verbally and on the website itself. So running through some of the reporting loss revenues, option 1, to be prepared for option 1 will be the difference between the actual patient care revenues for reporting period. Provider enters actual patient care revenues. No supporting documentation needs to be entered related to actuals. You enter actual revenue compared to actual revenue 19 compared to actual revenue 20 for each of the quarters. And the portal itself will handle how it's calculated. The information needed to report, so what you should be ready for. Again, I encourage you to download the Excel workbook because it will walk you through it. Information needed to report will be actual patient care revenues by payer type for each quarter and the actual payer care revenues for payer for 19. The worksheet, it's a workbook that's provided, will help you walk through each of those calculations and do the calculation. In other words, the one thing that was a little bit confusing when the lost revenue calculation came out was that there wasn't an actual calculation to be submitted, and that is just in the way that during the regs, it would talk about how lost revenues would be attributed. So we would do a calculation. When the portal opened, there wasn't a calculation. It was just to input the revenues on a by quarter basis. This chart shows you how from the option 1, you'd put in your 19 actuals, and this is how the chart looks in the workbook from HRSA as to how you would input your revenues. Medicare A and B, C, Medicaid, commercial, self-pay, and any other sources that you want to include in those actual revenues for 19. Enter your actual revenues for 20. And the portal itself will do the lost revenue calculation, and this is the way that they set it up. So you're not entering a calculation of lost revenues, you're entering what you calculate to be your revenues from an actual standpoint in option 1. In option 2, you're going to enter your budget. So you enter both the budgeted amount and the patient care revenues. System calculates the lost revenues. And there's no supporting information that's required, except if you'll look on the right and crank through actual patient care revenues, budgeted or entered, there's an attestation. So the attestation is required for option 2. In option 2, here's an illustrative example of how it works in the workbook. And it will show you quarter 1, 2, 3 for your budget versus your actuals. and it calculates what your lost revenues are inside it. So this is, you actually enter your revenues, your revenue calculations. Again, not your lost revenue calculation. The workbook will do it. Option 3 is a little bit more, I'm gonna call it inquisitive and out there, because there's no legislation that talks about how to calculate the lost revenues. This is any reasonable method. As I mentioned a few minutes ago, that HRSA has been encouraging the option 3 if it is helpful to the providers to be able to measure what is the reasonable method of estimating revenues. And so that has to be presented and uploaded and sent to HRSA within a narrative and other descriptions and the calculations. So you can use any reasonable method. It goes by quarter, and you can explain how you perform the calculation if it gives you more of a chance to keep some of the provider relief funds. The information needed to report is the narrative. I mentioned why the methodology is reasonable, description of how they were attributed to coronavirus, and then the actual calculation using the methodology described in the document. And so you would need to upload these into the portal when you're doing your portal reporting for the option 3 piece. And so the consideration is to be prepared for that. Some of the best practices for reasonable lost revenues are just be sure, keep your documentation, keep your narrative, keep everything that you've used for your calculation, especially for option 3, your budget for option 2. Hold on to your actual financials for 19 versus 20 if using option 1. Use consistent treatment in how you're presenting your revenues, so and your expenses. And so really stick to your method of accounting. Try to not switch up expenditures for different levels of accounting. Measure the amount of the baseline revenue and the lost revenue consistently. Be consistent with your policies and procedures. So everything that you can do to determine and support and document any of your methodology is going to be helpful. Don't double count. It might be easy to double count revenues versus the expenses that were already covered by payers. And that's the other last point. They should not be reimbursed by other sources. And so just be careful and not double count if expenses were already covered by another payer source or by another program that was awarded during COVID. The screenshot from HRSA to show the actual patient care revenue that is just explaining that providers who use their entire PRF on expenses won't even need to complete lost revenues. So if you clear the hurdle, so to speak, and have spent all of the PRF you received on expenses that were eligible expenses, and you complete those schedules, then you're not even required to do the lost revenue calculation. It won't even matter. Just some lost revenue reminders. Use the fines during the period of availability. Means the provider should be able to calculate and document a reduction in revenue for the time period of availability, time covered by the period of availability to the prior period. So just documentation. Keep it all together. Keep it close. Keep it. There's a maintenance period to hold on to the revenue. Even though HRSA has actually encouraged some of the option 3 item or option choice, that they still reserve the right to review it. And we'll kind of get into that in a minute as to how that might occur. But it is to keep in mind, make sure you document it, just be confident in your calculations. Lost revenues may be carried forward and applied against payments received or in later payment received, so long as they're not duplicated. And so from period 1 to period 2, so you got your quarters, quarter 1, quarter 2, quarter 3, that you're going to report your lost revenues, they are going to consider them in the aggregate. And so that's going to help providers. There was a huge question thinking that quarters wouldn't offset quarters. I've been on the webinars, and the calculations show that the quarters will be handled in the aggregate, just so long as you document and carry them forward and show how they were used. Lost revenue should be considered added to the schedule of federal expenditure awards, the CFA, for single audit purposes. And so we'll talk about that process in just a few minutes. And after you've entered all your expenses and entered your lost revenues and get to the end of the portal, and you've done everything you can do to substantiate what you received, because for many of you, it just showed up in your bank account one day, and it was hopeful that you would use it all for the purposes intended and with the guidelines that were given. But at the end of it, if you get through the portal and determine that you need to return some funds, HRSA has provided some guidance on how to return the funds. So if you, for any period, to the period of availability, the cutoff of the reporting, end up having to return it, you can return the unused funds through the portal. There are instructions on how to return it. And then if you don't return it through the portal, you have up until 30 days after, we touched on this in the very beginning, you have 30 days after the reporting period to get it returned. So I wanted to go over some single audit considerations. As mentioned at the end of the couple of slides ago, entering the provider relief funds on the CFAs, which are the Schedule of Expenditures of Federal Awards. The provider relief fund payments are subject to single audit, including commercial, not for-profit recipients, organizations that expend, and this was very definitive with respect to for-profits as well, that expend $750 or more in annual awards during their fiscal year end, have a couple of options. And they can have a financial audit in accordance with, and so it does say, yeah, I guess, which is government, generally accepted government auditing standards. So you'd have to have your entire financial statements performed under government regulation. You'd get an extra government auditing report, or you can have the audit in conformance with what's called single audit standards, which would be a separate audit over the award itself. As a single audit, you would receive a single audit report, and the PRF would be on that CFA, and you would have the extra supplementary schedules and letters related to the single audit itself. And so those are the two options that HRSA is describing would be necessary for recipients of over $750,000. We've recently had some CFA, Schedule of Expenditure Federal Awards, updates through July. And so one of the FAQs entered was when the provider relief fund expenditures are added, when added to the CFA. And so non-federal entities will add it for fiscal year ends after July 30 or at or after June 30th, 21. And then it tells you to refer to the OMB compliance supplement. And so they really gave everyone a cushion of sorts to have the expenditures, the PRF, in subsequent years. Probably like many of you, we've been wondering for a while, June 30 year ends, September year ends, and December year ends, how they would be included on the CFA, and even perhaps with the 2020 compliance supplement that was provided, there were a lot of procedures that were performed already related to that guidance. However, because the portal wasn't open, the reporting element of the compliance supplement couldn't be met. And so you couldn't release a single audit on PRF because that couldn't be performed. So this updated guidance, both from CFA and the GAQC, has allowed for these funds to be excluded for year ends prior to June 30. So they can be excluded. And anyone who's already in a single audit situation anyway, and a CFA, preparing a CFA anyway, can go ahead and release those that were prior. And then the CFAs will be, the PRF rather, will be added to the CFAs subsequent to June 30, 21. And then these are meant to match up with some timelines related to the portal reporting. So non-federal entities linked to submissions to the provider relief fund, the timing would be as follows. You have a fiscal year end of 3021 through 2021. Recipients report on the CFA won't happen, or will be for the period 1 that happened after that period. So I hope that makes sense. So everything that comes through June 30, 21 will be on a CFA subsequent to that, the first one being for the period 1 reporting. And then subsequent to that, for any fiscal years of 21 through June 22, those would be on the period 2 CFAs. For fiscal year ends on or after July 30, 22, then those periods will be provided at a later date as to when they would need to be included. And so they've reserved and held back that they want to wait and do a reporting period that's potentially later than that, depending on what they receive from the period 1 and period 2 reporting. A few of the single audit considerations are that so far the 2020 compliance supplement is still applicable until 21 compliance supplement is released. Expecting it to come out in a matter of months. It's in draft form at the moment, and so those should be coming out in the near term. The HHS FAQs were updated, as we just saw, explaining where the PRF goes and when the PRF goes on the CFAs. And then we had a GAQC. This is the Government Audit Quality Center of the AICPA. Alert number 429 confirms that the PRF should not be included. So we've got some congruence and agreement and a lot more guidance on this than we've ever had before and have been wondering for many months. And this is the point that single audits with year ends through 6/29/21, so before 6/30, they can be released excluding the PRF. So if there were any wonderments of outstanding single audits from September of 20, I don't know if any would still be outstanding from June of 20, but September of 20 or December of 20 can be released. The CFAs can be released without PRF. So with that, that is the majority of the content we wanted to share with you today. Working on having these updates available, touching on major topics, and hopefully helping you become a little more comfortable with what is included in the portal itself. I encourage you to get through the portal user guide. It's easy. Register and open the portal, click through the screens, because they're fairly open and easy to use. And I think that you'll find them very straightforward. And if you have any questions along the way, we certainly appreciate the opportunity to help you with those. Make sure you're prepared. with the information that was provided in today's webinar, that you're able to pull together the information that's necessary to go through it. If you're still unsure, you can open it up and go through it and see from screen to screen what will be necessary to finish it. We do have some clients that would prefer an extra set of helping hands or eyes on the information that are going in. And so we're working with a lot of clients on what goes into their portal reporting, helping them through the process. And we certainly would welcome the chance to work with you all on your portal reporting requirements.